Thank you for joining me. I'm Alex, and I would like to have a look at Adobe today. So Adobe is, in terms of software companies, a pretty old one. They used to make Photoshop. They now make Photoshop and Premiere Pro, so editing software for photos and videos and a lot of other things. Current price is $278, which gives them a market cap of $135 billion, which means that despite everything not being well known in the general population, they're a pretty big company. Current dividend is 0 and obviously past as well. I don't see that changing much in the near future. Not sure if they have a plan for that in the long term, but I would not count on them paying a dividend in the future either. Revenue is $9 billion, which is up 25%, which is definitely not bad. Earnings $2.6 billion, which is up 60%. And that gives them a PE of just slightly under 50. So it's 49.5 something. Total assets, $19 billion. Total liabilities, $9 billion, which gives them a total stockholders' equity of $9 billion, which is up 12-ish%, which is definitely going in the right direction. And obviously, if you're a dividend investor, you don't want this company. If you're a growth investor, you probably also don't want this company because, as I said, they're reasonably old and the market cap is already $135 billion. So it's about an eighth of the biggest company in the world. So they don't have too much room to grow there. And I don't see them having a lot of products that will really disrupt any industry, which gives them a really good opportunity to grow. So I think growth and dividend investors are kind of out here. For value investors with a reasonably long timeline, I think the PE just makes them far too rich right now. And I don't see them maintaining a PE of near 50 for a reasonably long time. So I really don't think that now is the time to invest in Adobe, even though things are definitely going in the right direction. And they're one of the companies that kind of started the subscription model when they moved from several $100 product of Photoshop to a pay by month thing. And it's apparently worked out well for them, so definitely not the wrong call there. I do see them being a fairly big company in the future, but I don't see them growing at any significant rate. And so I think that value investors will find way better value elsewhere. I think that Google at PE of 27 is a far better value than an Adobe at 50. I think an Amazon at an 84 PE is also a better value than an Adobe at 50. So if you're a value investor, I think you should probably stay away as well and find better opportunities that are definitely out there right now. So to sum that all up, if you're a dividend investor, this is not the company for you. If you're a growth investor, this is probably not the company for you. And if you're a value investor, this is probably not the company for you. Overall, I really like the company. I really like what they do. And I don't see them having too many risk factors. I don't see too many companies coming out and kind of taking their crown, so to speak, taking away from Photoshop. But I just think they're way overvalued right now, and I probably would buy them at half the price-ish. Anything over $200, I think I would stay away from this. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.